who's been going through a pretty interesting report that's come in from Citi. With Donald Trump all set to return to the White House, Citi researchers note highlights the impact that Trump's presidency could have on various aspects of global as well as the local market. Over to Hormaz for more.
Now, one of the biggest and the most anticipated events of the year is finally out of the way. Donald Trump will now become the 47th president of the United States, and that can have far-reaching consequences across sectors and asset classes equally. Now, Citi has come out with this note on how this Trump presidency can impact various aspects from sectors to fund flows and then to our own markets as well. They'll take you through them bit by bit. Now, for the fund flows bit, Citi says that it is contingent on China because any big stimulus announcement that comes out from there can increase the rotation of this trade out of India into China and vice versa. Now, it wants to focus on domestic flows as well, particularly after the 10% correction that we have seen on the Nifty from the peak. Now, it sees a limited impact on the domestic-oriented economy, but sectors like pharma, chemicals, IT services, and auto ancillaries are the ones that can be impacted. Now, for the chemical space, India accounted for nearly 5% of the organic and miscellaneous chemical exports to the US, and the impact of that will depend on the tariff levied on specific products, if any, and vice versa as well. Now, for the auto ancillary space, the China Plus One policy can benefit stocks like Sona Comstar, Balkrishna Industries, Samvardhana Motherson and Bharat Forge, but that is subject to how the relative tariffs change within the sector itself. Now, for the pharma space, Citi says that the Western biopharma companies are looking for vendors beyond China, and stocks like Divi's Laboratories are better placed compared to its peers due to the costs and the capacities that it has. Now, while a Trump presidency was said to be negative for Indian IT, Citi believes that the companies are now better positioned to deliver more via offshore post the COVID pandemic. Now, it also wants to watch out for any potential tax cuts and the impact that it can have on any of these stocks. Now, the result is definitely a negative for the metal sector, just for the threat of the increased tariffs. But Citi is unsure whether any of this higher stimulus from China to offset this can lead to upgrades for Indian steel stocks, which have already run up quite a bit. Now, Citi also says that the Trump presidency is negative for oil prices, and that reinforces their conviction to maintain their buy recommendations on OMCs like HPCL, BPCL and Indian Oil compared to its neutral stance on stocks like ONGC. Now, the brokerage draws upon the 2016 election that Trump had won. Now, while Indian equities had delivered 23% returns in US dollar terms over the next 12 months, sectors like energy, telecom, materials outperformed, while IT, healthcare and consumer discretionary were the underperformers. So what does that do to our own markets now? The Citi believes that despite the correction that we have had, valuations are off the highs, but they still remain above historical averages. It prefers buying the dips, and its September 2025 target implies a 4% upside on the Nifty currently. So there you go. Donald Trump, the 47th president of the United States and a disruptor for multiple sectors. For India, it's more a case of you win some, you lose some.
All right, Hormaz, thank you very much. 4% all the way till September 25. That's a long period of consolidation that a lot of newer investors perhaps in the market would not be used to. Interesting view coming in from Citi. Thank you very much for joining.
For more news and updates, all you need to do is follow CNBC TV18 on all of our digital platforms.